Welcome to the deep dive. Today we're really zeroing in on Microsoft, specifically their third quarter financials for fiscal 25.
Yep, we've got the official slide deck they released on April 30th.
And our mission here really is to pull out the key stuff, what actually mattered in these numbers. We want to give you a clear picture of how they did.
Exactly. We're aiming to, cut through the raw data from that slides FY25 Q3.pdf and highlight the trends, the big takeaways, make sense of it all.
And it's worth remembering this is their presentation. So it covers the big financial summary, segment performance, the GAAP versus non-GAAP stuff, and of course those forward-looking statements. Always need to take those with a grain of salt, right? Future's uncertain.
Always. So shall we jump into the overall financial picture for Q3?
Let's do it. What's the headline number?
Okay, so total revenue landed at $70.1 billion. That's up 13% compared to last year.
13%. Pretty solid.
Yeah, and actually, if you look at it in constant currency, so taking out the exchange rate effects, it's even better, 15% growth. Shows real underlying strength.
Right. Okay, so $70 billion overall. How does that break down across their main businesses? Productivity and business processes first.
Right. That segment, think Microsoft 365, LinkedIn brought in $29.9 billion. That was up 10%, or 13% in constant currency. Good growth there.
Okay, and then intelligent cloud, that's usually the big growth engine.
Absolutely still is. Pulled in $26.8 billion. And the growth there was 21%. Even stronger in constant currency, 22%. That's Azure server products. Really humming.
Wow. Yeah, 21% is significant. And the last piece, more personal computing, Windows, Xbox, search.
That came in at $13.4 billion. Growth was 6% or 7% in constant currency. So still growing, but, definitely slower than the cloud segment.
Makes sense. Cloud is clearly the powerhouse right now.
No doubt. And this top-line growth, it flowed through to profits, too. Gross margin was $48.1 billion.
Which gives a margin percentage of?
69%. Pretty healthy. And operating income, that hit $32.0 billion. That's up 16% or 19% in constant currency.
So costs are being managed relative to revenue growth, it seems.
It appears so.
And the bottom line, net income.
Looking good there, too. $25.8 billion in net income. That's an 18% jump, 19% in constant currency.
And earnings per share followed that.
Yep. Exactly. Diluted EPS was $3.46, also on 18% or 19% constant currency. So it wasn't just revenue growth, it was profitable growth.
Okay, great overview of the big numbers. Let's maybe pivot to the commercial side. Any key highlights from their business customers this quarter?
Yeah, definitely. Commercial bookings really stood out. They saw an 18% increase year over year. That's 17% in constant currency.
And bookings are important because they signal future revenue, right?
Exactly. It's the value of new contracts signed. So strong growth there, driven by Azure, and just consistent execution on their big deals suggests the pipeline is really healthy.
Yeah, good sign. What are the total value of existing contracts, the remaining performance obligation?
That number is just massive. Commercial RPO reached $315 billion.
Wow.
Yeah, up 34% year over year, or 33% in constant currency. It really speaks to the long-term deals businesses are signing, locking into the Microsoft ecosystem.
Is most of that commercial revenue still coming from subscriptions, that annuity mix?
Oh yeah, very much so. It stayed super high at 98%, actually ticked up a point from last year.
Driven by the cloud shift, I assume.
Precisely. Everyone keeps moving to their cloud services.
Speaking of which, let's isolate the Microsoft Cloud number itself. How big was that?
Microsoft Cloud revenue specifically was $42.4 billion for the quarter.
$42 billion, that's huge.
It really is. Up 20% year over year, 22% in constant currency. Just dominates. But there was an interesting point on the margin side.
Oh, what was that?
The gross margin percentage for Microsoft Cloud actually dipped slightly, came in at 69%.
Why was that?
The reason they gave was basically the cost of scaling up their AI infrastructure. Building out all those data centers and GPUs needed for AI, it puts pressure on margins in the near term.
Ah, okay. Investment phase. Makes sense. You need to spend big to support that kind of tech.
Exactly.
Okay. Shifting gears slightly again. What else stood out in the other financial details? Shareholder returns.
Yeah, they returned a good chunk to shareholders, $9.7 billion in total. That broke down into $6.2 billion in dividends and $3.5 billion in share buybacks.
Always something investors like to see.
Shows confidence and financial health.
What about their spending? Operating expenses.
OPEX was $16.1 billion. The increase was actually pretty modest, just 2% year over year or 3% in constant currency.
And what drove that increase?
Mostly investments in cloud and AI engineering, hiring talent, R&D, focusing on those strategic growth areas again.
Right. And I saw something about OpenAI affecting the numbers, too.
Yeah, that showed up in the other income and expense line. It was a loss of $623 million. They said that was mainly due to their share of OpenAI's loss.
Ah, because of their investment stake.
Exactly. They use the equity method for accounting, so OpenAI's losses flow through partially to Microsoft's results. Just a reminder that those big AI bets can have impacts.
Interesting detail.
Hmm.
Taxes and capital spending, how much are they investing in physical stuff?
Effective tax rate was 18%. And yeah, capital expenditures, or CapEx, were significant. $21.4 billion total, including finance leases,
And most of that for
property and equipment. Yeah. About $16.7 billion went there. Again, building out data centers, infrastructure for cloud and AI, huge investments.
clearly putting serious money behind those areas.
Yeah.
How did all this spending affect their actual cash flow?
Well, cash flow from operations was strong, $37.0 billion, up 16%, helped by good cloud billings and collections.
Right.
But free cash flow, which is after you subtract that big CapEx number, was $20.3 billion. And that was actually down 3% year over year.
Because the capital spending was so high.
Exactly. Those investments needed to fuel the cloud, and AI growth are eating into the free cash flow number for now.
Okay, that paints a really clear picture of the overall financials and the big strategic pushes. Should we zoom in now on the individual business segment? Maybe start with productivity and business processes.
Sure. So within that segment, Microsoft 365 Commercial, the business side, saw revenue up 11% or 14% constant currency.
And what drove that? More users, higher prices.
Both, really. The M365 Commercial Cloud revenue was up 12%, and they also grew seats, the number of users, by 7%. So more businesses signing up and perhaps moving to higher value plans.
And how about the consumer side of Microsoft 365?
Also growing nicely. Revenue up 10% or 12% constant currency. Consumer cloud revenue drove that, also up 10%. And they now have 87.7 million consumer subscribers.
Wow, that's a lot of individual and family users.
It really is.
And LinkedIn is in this segment too. How'd it do?
LinkedIn revenue grew 7% or 8% constant currency. And importantly, engagement measured by sessions was up 9%. So people are using it more.
Good sign for itself. And the Dynamics business apps.
Also solid. Dynamics products and cloud services revenue increased 11% or 13% constant currency. The real driver there was Dynamics 365 itself, which grew revenue by 16% or 18% constant currency. Cloud momentum again.
Definitely seems to be the theme. Okay, let's move to the segment that looked like the real star this quarter, Intelligent Cloud.
Yeah, the powerhouse. So the headline number. Server products and cloud services revenue jumped 22%. Or 24% constant currency.
And drilling down into that.
The main story is Azure and other cloud services. Revenue there grew an incredible 33% or 35% in constant currency. Just massive demand.
33% on an already huge base. That's impressive.
It really is. Interestingly, though, the traditional on-premise server products revenue actually declined, down 6% or 4% constant currency.
Reflecting that shift to cloud, I guess.
Almost certainly, yeah. The other smaller part of this segment, enterprise and partner services, grew about 5% or 6% constant currency. More modest growth there.
Okay. And the final segment, more personal computing. What were the highlights or lowlights there?
It was a bit of a mixed bag, you know. Windows, OEM, and devices revenue overall was up 3%.
OEM is the licenses sold to PC makers.
Right. That specific part, Windows OEM revenue, was also up 3%. Microsoft mentioned that elevated inventory levels still played a role there.
Okay. And gaming, Xbox.
So Xbox content and services revenue was up 8% or 9% constant currency. That was helped by Game Pass subscriptions, plus Call of Duty and Minecraft doing well.
But hardware.
Yeah, Xbox hardware revenue was down 6% or 5% constant currency. Console sales slowing down a bit, perhaps? Could be the cycle, could be spending shifts.
Okay. And the last piece in this segment is search advertising.
Right. Search and news advertising revenue, if you exclude the traffic acquisition costs, that showed really strong growth. Up 21% or 23% constant currency.
That's quite a jump, maybe benefiting from AI integration in Bing.
Very likely, yeah. That seems to be giving it a boost.
Okay, so we've gone through all the pieces. If you were to pull it all together now, what are the main sort of interconnected takeaways?
Well, the big narrative is definitely the relentless strength of Microsoft Cloud. Azure is just firing on all cylinders, driving that intelligent cloud segment. And it's clear that demand for cloud and increasingly AI services on top of it is just huge.
And that connects directly to the strong overall revenue and profit growth we saw earlier.
Exactly. And alongside that, you've got the productivity and business processes segment delivering really consistent, healthy growth too. Microsoft 365, both commercial and consumer, just keeps expanding its reach.
Yeah, that annuity base is powerful.
It really is. And then you look at more personal computing, it's not the main growth driver, but areas like search are actually showing surprising strength, while others like Xbox hardware face, some headwinds.
And the financial highlights tie into this perfectly, right? The huge CapEx spending we talked about.
Directly supports that cloud and AI growth. It's the investment needed to deliver what Azure and M365 customers are demanding. Even the OpenAI loss reflects their big strategic bet on AI's future.
So it all paints a picture of a company heavily and successfully betting on cloud and AI as the core pillars.
I think that's exactly right, and those strong commercial bookings and the massive RPO suggest that businesses are betting along with them for the long haul.
Okay, great summary. So as we wrap up this deep dive on Microsoft's Q3, what's the final crystallized insight you want listeners to take away?
I think the clearest takeaway is just the sheer strength of the overall growth, really underpinned by that cloud momentum. Productivity and business processes were solid performers too, and even personal computing had bright spots. It's a pretty positive picture overall.
Yeah, it really feels like their big strategic focus on cloud and now layering AI on top is really paying dividends, even if those investments, like in infrastructure, impact margins a bit short term.
Absolutely. And it's not just about Microsoft, right? These results kind of mirror what's happening across tech. Cloud is fundamental. AI is the next huge wave requiring massive investment.
That's a really good final thought. It makes you wonder, what do these results suggest about what's coming next? For Microsoft, obviously, but also for the whole industry shaped by these cloud and AI trends. Definitely something to chew on.
For sure. Lots to think about.
Well, thanks for walking through all that detail with me. Really insightful.
My pleasure. Always interesting to unpack these numbers.